Hi everyone, hope you guys are doing well. I'm okay. I'm taking a few days off from my retirement, so I'm relaxing in the Canary Islands. And so I'm recording from an Airbnb. I had to close the curtains behind me because it's too sunny and beautiful. And but anyway, I'm gonna take a few minutes to record this video because I received a few questions regarding the income calculator that I have on the website that apparently people is having difficulties telling me that it's not working well. But however, when I go into the website, into the web page, the calculators are working. So what I'm going to do is instead of trying to explain one by one how does it work, so I decided to record a video. And just a few minutes ago, just when I was getting ready to record this video, I received an email asking me questions about the GIS. A person that is retiring, so you're going to get two for one, and we're going to go through the income calculator and the pension calculator. So let me go to my website, which is www.pensionbooster.ca. Don't worry about writing this down if you don't know what it is. It will be the details will be below the video on the description. So I'll see you right there on the web page. Well, this is the website, Pension Booster, and this is free of charge. You only have to register to be able to use the calculators. There is a tutorial, a video tutorial. Go through it, you've never seen it. But today I'm going to go straight into the calculators that are right here. And the one was the income calculator. This calculator is used to this it's used to calculate, well, you're going to approach retirement, you're going to get into retirement with so much money, you save so much for your retirement savings or whatever method you use. And and you have, say, $100,000. You enter here the amount that you have, in fact, right? And then you also enter what you expect to on return on your investments, how much you think you're going to earn, because you will be retired. Uh, let's be conservative and let's use 5%, but you can use any number you want to. And then after I'm going to change these numbers. And then you need to specify how much income you will withdraw from that $100,000 every year. So you have $100,000, you're earning 5% on your investment, and but you will withdraw income, and say you will withdraw $6,000 the first year, and then we say. Well, there is inflation. Of course, if you retire at age 65, you expect it to live up to age 85, which is life expectancy in Canada. So inflation is going to eat your money away, and you want to increase that $6,000 every year by say a 3%. And now you hit enter, and then we'll see how much you have, how much your money, how long your money is going to last. What happens is I receive messages telling me the calculator is not working, it's not adding the return on investment. And here is how it works. Here you have year one. Okay, year one, you have $100,000. You deduct, you take away 6,000. This is what you withdraw for the first year in retirement. The total income that you have received from your money is 6,000 because it's only one the first year. And by year two, you will have the 100,000 less 6,000 plus the 5% return on investment, which is equals to 98,700. So from which you will withdraw 6,180, which is the $6,000 from the first year plus the 3% to cover inflation that you decide to increase every year, $6,180. So how much did you receive from your investment in total by year number two? Well, the 6,000 plus the 6,180, 12,180. Year three, so, well, you will have the 98,000 less than 6,180 plus the 5% that you decide to have, $97,146. And then from there, you will withdraw 6,365.40 with 40 cents, which is the 6,180 plus the 3%. So, and in total, if you do this, you will have withdrawn $18,545, which is all these three amounts add together, the right here. And if you do this, in this fashion, in 20 years, by year 20, you will have $9,060 left in your account, and you will need $10,521. So, give or take, your money lasts 20 years. But you say, well, probably I want my money last longer. Well, if you want your money last longer, all you do is just say, okay, I will withdraw a little bit less, and then your money is going to last a little bit longer if you start with a little bit instead of 6,000, 5,000, or instead of 3%. Instead of adjusting 3% every year for inflation, you adjust 2%. Okay, and money will last even longer. Now you're approaching 30 years into retirement, and this is how the income calculator works. It's just to estimate how long your money is going to last. It's not something that you're going to use. Say you retire at age 65 and you enter this number. This is what's going to happen, because eventually you're not going to get your return on investment 5%. And we are not going to have it. We cannot anticipate how much the return on investment is, and you cannot anticipate how much inflation will be. We cannot anticipate all that. But if you keep an eye on your investments, and every year you do this exercise based on your balance, the balance of your investment account at the end of the year, well, then you will be pretty safe with your investment, because every year you will be adjusting. The years that the stock market performs poorly, well, unfortunately, you will be able to withdraw less money, probably nothing. But this is how it works. This is how the income calculator works. Let me know, guys. Just leave me a message to make sure that you got it working on your terminal, on your computer, because a few people send me messages that they can't make it work. Hopefully, you're going to be able to make it work. If not, you just contact me, drop me an email. Below the video in the description, there will be my contact information. So now let's go into the GIS, because I had a question regarding the GIS today. So to go to this other calculator, we have to go back to calculators and go into pension calculator. And the question was telling me that it will be age 65 in this November of 2024, and it's planning to retire as of January of 2025. This gentleman tells me that his wife is already retired and already receiving old age security. So he's confused. He doesn't know when he can start receiving GIS. So I'm assuming, like, if he's will turn 65 in November, and the wife is already receiving all the security, the wife is already 65, that will correspond to calculator number 2. So this is calculator number 2 is for a couple, right here, a couple with both spouses age 65 or over. And I'm assuming, because I don't know, I don't have any details about this person, that I will be assuming that both spouses, husband and wife, they have each 40 years of Canadian residency between age 18 and age 65. If you don't have 40 years of Canadian residency, any other number, if you have 32 years, then you enter 32 there. And this calculator, every time you enter a new value on the blue cells, which are the cells that you have at your disposal, then you have to hit the button calculate. You have to come here and hit this calculation in order to change the number. See? So here we have one spouse with 32 years of Canadian residency and one with 40, and the one with 40 has maximum all-day security for the period of January to March 2024, which is $713, but the one with 32 years has only $570. But we will assume that this couple, they both have 40 years of residency, so let's calculate at 40 years, and they each will have $713. If they have this amount of all-day security and absolutely no other income, nothing at all, no employment income, no RRSP withdrawals, no employer pension, no rental income, no income at all, then the guaranteed income supplement as of January will be $641 each. Now, if they have any other income, this number is going to start coming down. For example, if they happen to have, say, $500 of Canada Pension Plan, one of the spouses, and we recalculate, the 641 is going to go to 496. And if the other spouse has also $500 of Canada Pension Plan or Quebec Pension Plan, and we recalculate, then their guaranteed income supplement will be $344. And so on. You keep on going and you keep on adding other types of income that you may have. So in this field here, you enter any other income. Employment insurance, WSIB, you probably have a pension from workers' compensation, interest income from an investment and non-registered investment, RRSP or RIF withdrawals. If you do have RRSPs, make sure when you want to start withdrawing a retirement that you convert into RIF. Don't make withdrawals from RRSPs because RRSP is a savings plan and RIF is a pension plan. So when you withdraw from a pension plan, you have the pension tax credit, so you take advantage of that. So you may have annuity, rental income, any other type of income that you report to the Canada Revenue Agency on your income tax. You report it here on this cell. You add all those incomes together and you're reporting here, employer pension, whatever it is, except capital gains, dividends, employment or net self-employment income. Those are treated very differently. So here is what you do. If you have employment income, you enter the monthly employment or net self-employment income here in this cell. And if you have eligible dividends, you report it on this cell. You know if you have eligible dividends because just take a look on your T5 slip that you receive from your investments. If you have an amount on box number 24, see the T slips that you receive to file your income tax, they have boxes with numbers. So just check if you have an amount on box number 24 or if you have an amount on box 10. So if it's in box 24, you enter them here. If you are in box 10, you enter them here, the different dividends. Okay, then capital gains, and then tax-free savings account. The tax-free savings account is only for the purpose of adding to the total income here at the bottom. Okay. And this is how you calculate your income. If you have any questions, once again, you contact me. You can give me a call. I'm not in Canada. As I said, I'm in the Canary Islands now. From here, I'm going back to Spain, but I have an international number, which is a local number for Canada. You can call me. Just think of the time difference or just drop me a message, or you can always send me an email or reach me on WhatsApp. With regards to when you will get, if you turn age 65 in November and your spouse is already receiving all day security, that's a very different story. Let me tell you how that works. To do that, if you already apply, I hope you already did apply for all-day security for yourself, because if you turn age 65 in November, all-day security takes approximately 10 months in order to process your application. If you did apply, they ask you on the application when you will stop working. And probably you said I will stop working at the end of the year in December. Um, so if you did that, by January, you will receive a form from All Day Security in which you will declare your income for 2024 and for 2025, which, well, if you're not working, is going to be zero, right? But any other income that you may have. And you have to process that form. Technically, if you stop working in December of 2024 and you have no other income, you qualify, you become eligible to receive GIS, you have no other income or very little other income other than all-day security. Other than all-day security includes Canada Pension Plan, employment income, investment income, RRSP withdrawals, rental income, any income that you report on your income tax. Okay, if you don't have any other income or very little other income, then you might be eligible to receive a GIS. But what happens is you work the whole of 2024. So you had income in 2024, and you also had income in 2023. So the government doesn't know, Service Canada doesn't know that in 2025 you're not going to have income, and they will not know this until 2026 when you file your income tax for 2025. So am I confusing you enough already? Uh, so here is what you do. You call Service Canada and you tell them that you stop working and that you have no more income and you think you qualify for the guaranteed income supplement. They will send you a form. The number of the form is ISP 3041. They will send you that form. Don't look for that form on the internet. It doesn't exist. You're not going to be able to find it. There is a lot of people that is trying to sell that form. Just don't pay attention. That's not legal. So Service Canada had to send it to you. And when you complete that form, then they will take approximately 5 months in order to process it. And if you are eligible to receive GIS, they will pay you retroactively from January 2025. So probably it's going to take until May, June, July, around there, and then they will pay you retroactively to January. But make sure that you call them, that you call Service Canada, or you go to a Service Canada office and you explain your situation. You tell them, hey, I work until November or until December of 2024. I retired as of January 2025. I have no more income and I think I qualify for the GIS. What can I do? And they will tell you. They will give you that form. Okay. So that's what you need to do. If you have any problems, just give me a shot. Drop me an email, and I tell you what to do. Other than that, guys, thank you for watching. Make sure you subscribe to the channel. You're gonna help me a lot. Give me a thumbs up if you like the video. I promise I will record another video that I was thinking about, which is about do-it-yourself retirement planning. But I'm in vacation. I'm vacation from my retirement, but I'm vacation still. So I don't think it's going to happen today or tomorrow. Probably next week. But until then, be safe. Enjoy the video and give me the thumbs up if you can. Thank you.